Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday. It's October the 24th, 2012. We're looking at some of our open positions. We're looking at the major markets, starting off with the Dow Jones Industrial Average. You can see that I've advanced the stops in just about everything. Not everything, but almost everything. If you've not been to the free website at PerfectStockAlert.com, it's right there. It's 100% free. All we ask in return, refer a friend, yada yada. The main thing here to point out is that all these charts are kept on the free website there, updated every single night. So if there's anything that I didn't cover in tonight's video and you wanted to see it, you can always go there and check it out. My notes are there. You're looking at my personal charts whenever you look at that website right there. Main thing here, again, I've advanced the stops to this point, and there's a few things to know. I talked about this a little bit yesterday. So let's go into it. Right now I'm looking at this move right here as being a great move to the downside, nice slide here, but there are signs that we could see a bounce, and so I've tightened up the stop, and I have to do that because it's what traders do. Whenever you get an ultimate oscillator pulls back down into the 30 line, you've got to start tighten up your stop loss limits. If you don't do that, you can end up getting hit and have to hold through another bounce. In this scenario here, if we were to see another bounce immediately, I would take that as a short opportunity. So tightening up my stop here in this particular situation, I'm not a fan of, because I would simply be looking to get back in on the short side, and that, if it happened intraday, it's a possibility that I would miss that move there. So that's something to think about. Right now, I'm looking at this trade, and I've already talked about this. This little support line that you have here, and we just extend it over here, it actually corresponds with this 200 period moving average, or roughly. The main thing here is I don't expect that to actually hold. I think we'll break through that. We could bounce before that happens, though. So you could see this move here, bounce off of it like this, pull around here. Something like that could go on, or maybe kind of drag it out a little bit and then start to go over. The main thing here is if that were to happen, you would want to be going short because the trend is now down. You have lower series of highs, lower series of lows, no question about that. The thing you also want to think about is when you get those downtrends and you're looking for short opportunities, the best short opportunities are at or above the 50 period moving average. So any little bounce here would simply take you back to that point. If you had a bounce that high, that would actually allow you to get short again. On top of that, you would actually be able to look at the chart at that point in time and say, all right, well, we had the first shoulder here, the head formation here, and another shoulder formation roughly bounces to roughly the same level and comes back over. It's just a bigger topping pattern forming on the overall chart. And we saw this triple top here, but there's even a bigger one forming beyond that. So this is something that's very, very bearish for the markets. And again, I'd want to be looking for another short opportunity if I got stopped out. Couple of things I think you might want to know. You'll probably hear them anywhere. This little candlestick formation is an inverted hammer candlestick formation. So whenever you have a shooting star, it'll be like this. You run up here and you get it like here. That's telling you that you're looking at a top signal, a sell signal. When they happen at the bottom of a pattern, it's telling you the opposite. It's telling you to look for a bounce. And so again, this would be calling for a bounce here. Then people will be looking at that, and maybe even some people will be trading it. You're also trading below the lower Bollinger Band line. A lot of times people will try to catch a falling knife that way, and I don't recommend you to attempt to buy this market in any way, shape, or form. But there will be those that will attempt to do it, and this will be their argument. On top of that, they're also going to be pointing out this little bullish divergence formation, low point here, higher low here. It's trending up, corresponding time frame on the chart. You've got this low point here. Corresponding low point obviously here is trending down, telling you that this move down here is unsustainable. Look for a bounce. A bounce does not mean trend change, just means bounce. So again, if we got that bounce, I would be shorting it again. Quick little glance here at the NASDAQ. We were stopped out of this position today. That's the problem with advancing your stops to 1 cent above the high. Is if you get a bounce higher than the previous day's high, even if it's just intraday, you can be stopped out and then you can continue moving lower. In this particular case, we have a higher high from one day to the next as well as a higher low, so it's possible that we're going to stall here at the 200-day moving average and find support and then bounce later. That would make sense with the ultimate oscillator indicating that bullish divergence formation here and here. If you simply draw out your trend lines there, you can see that the closes don't match up. Basically, you can see that they're saying the price is overshot to the downside and look for a bounce. That would be fine too. If hopefully we get one. If we don't, and she continues to run to the downside, we've just missed a great trade here. The XOI oil index, this is another one we've made a nice bit of money on, and again, I've advanced the stop down to 1 cent above today's high, and that's where I'm keeping that stop at. You'll note the same overall conditions. You've got the reversal signal here calling for a bounce. Again, note a bounce does not equal change in trend, but it's something to keep an eye on. So I've advanced the stop there. You also notice again the low point here on the ultimate oscillator. The next low point is trending up. This is not as bad as on the other markets. You don't see this dip here as severe as we were looking at the Dow Jones Industrial Average or the Nasdaq. So this could simply continue to move lower, get deeper here, and justify itself. So it's not as concerning as the other ones are to me, but again, we could see a bounce here, so keep that in mind. Also keep in mind that this is where I'm looking for the best entry opportunities. The 50 period moving average on all these charts when I'm on a downtrend, those are going to be the best opportunities to get short, especially this early in the beginning of a new trend. The Russell 2000 Small Cap Index, the overall chart pattern is a lot like the oil chart. We haven't actually traded this one to the downside here, didn't take advantage of that. We actually missed a good opportunity a while back when we had this little shooting star signal here. We were just looking at the overall bullish chart pattern still in formation there. Previous resistance could be acting as support, so we didn't really like that on the short side of the trade there. Didn't see a lot of downside. You did get a little bit of a move there, a bounce, and then she's gone through and broken down. Now if I get another bounce in the future, I will be able to take that as an opportunity to go short. Right now, I'm just going to keep watching it. The S&P 500 Large Cap Index, this one we've also advanced the stop on all the way up to 1 cent above today's high. I could see leaving the stop here. If you were willing to hold through a bounce, I could see that scenario. The reason why I don't think you'll take that out is because you've been at this level before, and you've attempted to rally to that point. You failed, you pulled back, you attempted again, failed again, attempted again, and failed again. The idea that now, from this exact same point that you've been at before, you're going to rally up here and break out seems ludicrous to me. So any bounce here at this particular point in time would obviously be limited because you're very close to your 50 period moving average where I'd be getting short again. And so that's, looking at this trade right now, I think we still have more downside potential here on the S&P 500. Again, also note the 200 period moving average, once you've broken the 50, becomes the next area where you typically find your bounce point, so you still got some downside potential before that comes into play. That would also take out this little support line here, which I don't think is really going to hold it at this point anyway. So all of that in mind, that's where I'm looking at the best opportunities to still be going short would be the S&P 500. You also notice the same conditions on the reversal call. You could say that someone could argue that this is calling for a bounce in the other direction, which is true. However, I'd like to point out, whenever I'm in a bullish uptrend, I look for hammer candlestick formations to be a bottom, and then move to the upside and pull back down, hammer candlestick formation, and get me confirmation move to the upside. As long as those stay in play, I'm confident about my overall trend. When they stop being there, all of a sudden I have a problem. Over here, they were not there. We didn't have a hammer candlestick, so we were saying, hey, I'm not going to buy this scenario. There's something wrong here. And then many times when you don't have them, it just means you're going to bounce and then go right through it. Well, whenever you're looking at a short situation or trading in the other direction on the downtrend, basically the same overall theory. So you get a pullback here, and then you get a bounce that doesn't happen on a hammer candlestick formation. In other words, this candlestick right here is not a hammer. If it had been, then the bounce there would be more trustworthy for bulls, and therefore it'd be more dangerous for bears. In this case, you don't have that. So yes, you can bounce here. You might do that sometime this week and you get a bounce up here, but I wouldn't expect this to actually hold. I don't think it's a true bottom, and I think eventually you go right through it. The Toronto Stock Exchange, or the TSX, this one we've advanced the stop as well, and we've had 4 consecutive days to the downside. You don't have to advance the stop on this one. You're still trading at the 50 period moving average, where you start of a downtrend. You'd be looking for these as being the situations or the points where you want to be going short, not where you want to be getting stopped out. You've also got the ultimate oscillator still up here about the 50 line, so there's not a great deal of call to advance the stop here, but just to protect profits, I've gone ahead and advanced the stop there. There's one that I didn't, and I'll show it to you in a moment. The EMW, the Wilshire 4500, this one I have not advanced the stop on. I've left it in the previous high. This is got different situation here. You could look at it from different perspectives. The first being that you have this overall chart pattern here that has broken down. You've got to close below that support line here. But at the same time, you have had 5 consecutive days to the downside, and you're getting a bounce signal here telling you can look for a bounce here. I'm not going to trust that. I don't believe that you're going to take out the previous high at this point here. You could bounce in here and come back up to this level that you've seen before, this little resistance line, bounce off that again. So that's why I cannot advance the stop there. It's just at the same point that I would be looking to go short again, because you're very close to the 50 period moving average. But you also can look at this in a different way. If the market is excessively bearish, what you'll see a lot of times when you get these signals here that would typically call for a bounce, it will end up marking resistance. So the next day you can actually sell off even further. That would be another situation where you can go short at, because that's basically the market's way of telling you if this is a peak. So right here, even though you're what looks like a bottom now, if you were to get a really bearish scenario, you'll see that set up and then she'll just slide the very next day. That's another sell opportunity right there, and you expect this to be a new resistance point. You could simply at that point take the stop loss from here down to here and look for this to continue to move lower. As this is the first leg, this is hesitation, this is the second leg right there. I would be keeping an eye on Friday's market activity. Basically, the closer we get to the weekend and the longer we continue to move to the downside, the greater the odds that Friday we're going to see some kind of a bounce, simply because shorts are going to be taking their profits ahead of the weekend and just to be taking some profit off the table. So that's something to think about. It's Wednesday now. We got a couple days left of this week, but I would expect at some point you are going to get a bounce. That bounce, the very next bounce that comes along, I will short. It won't probably wait. It won't be a single day. It may be a couple days to the upside. We'll keep an eye on it, look for the right signals, right entry opportunities. But again, the very next bounce you get is a great short opportunity. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. I'd also like to point out everything I just said about that next bounce opportunity is not just relating to this chart. It's relating to all the major charts that you just looked at on this video, because they're all in this bearish trend that's all just begun. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.